Good morning, everyone. Welcome to Tiger Assets YouTube channel. Today we will discuss about the recent notification by SEBI on small cap funds. We will divide the discussion into three parts. First, why did SEBI recommend small cap funds and not large cap funds? Second, what are the basic concerns which SEBI is trying to highlight in its notification? And third, how should we look to readjust our portfolio to make it in adherence with the concerns which SEBI is trying to point out? So first, small cap size is very small as compared to the total equity market. It is hardly 5 to 7%. Recently, we have seen a lot of inflows have come to small cap funds, which typically has been much larger than what it has been in the past. This has been because small caps in last 1 year has given very good return. 12-month return for small caps will be 70% plus. And a lot of mutual fund investors look at past returns and invest money. So then it becomes a chicken and an egg situation. Last 12 months returns are very good, so people put in more money. And since they put in more money goes to small cap stocks, they go up further. And there is an overvaluation which has happened in small cap stocks. And that is a worry for SEBI. And that is where we come to point two. What happens is, the worries for SEBI is first that small cap stocks are getting overvalued. Because a lot of money is coming in small cap funds which get invested in small cap stocks, so they are naturally going up, which is not actually the correct valuation. Second, in case a small cap fund wants to liquidate its stock and wants to pay back its investors, suppose we have a COVID-like situation, a lot of investors want to redeem the money. Since the size of the small cap stocks are very, very small, and a small cap fund needs to sell good amount of those stocks, it will have a very negative impact on the stock itself. So to avoid this situation, SEBI is being proactive and saying that, okay, be careful about what inflows you are taking in, so that tomorrow if there's a situation, don't tell me that you cannot liquefy these funds at a very short notice. Third part is how we should look to balance our portfolio. What should we look to do? First is we look to have a look at our portfolio once again and see where our portfolio is currently. Suppose our portfolio has more than 10, 15, 20% small caps, then we need to shift out of small caps in that case. Because typically, as we mentioned before, small cap is less than 10% of the market size. So your portfolio should not have 50% of small cap in it. Then you are very highly over-invested in small cap funds. And since SEBI has flagged off that right now small caps might be overvalued, we should not go and proactively invest in small caps. For the time being, let us just stop investing in small caps. And then let us see how we want to go about it in, say, 6 months from now. So this would be our recommendation, very easy to understand, on SEBI's recent notification on small caps. And we hope that you adhere to those recommendations. Thank you.
Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.